All right, welcome back to Restaurantopia. We've got another fantastic episode and actually a special guest, the CFO of Hillcrest Foods, Jamie Romano. He's here today to talk about a lot of money that's on the table for restaurateurs out there.
Go out there and get it.
Yeah, absolutely. We've got he's going to talk a little bit about the second round of the PPP loans, the employee retention credit for 2020 and 2021, and then something amazing, the Restaurant Revitalization Fund. Hang around and check this out.
No, you got to listen to this. You're going to love it. Very, very helpful.
Imagine a perfect world where you can build a restaurant, open the doors, and make loads of money. Unfortunately, those days are over. It takes great leadership, hard work, and long hours to operate a successful restaurant. Together, we can make it happen. This is Restaurantopia. Not that you can't do accounting for any business, but the fact that you're primarily doing restaurants allows you probably some knowledge over the years that maybe other people in your profession aren't going to have to be able to pinpoint and help the operator
100%.
find those different things, right?
Most CPAs are dealing with companies all over the spectrum. And so they may have 1 or 2 or 5 restaurants, but it's not what they're involved in every day.
Right.
And so when they're looking at cost of goods, they don't even know, what should it run.
Right.
Yeah.
So that's a key part for not only your accountant to know, but then you as the restaurant owner to know.
Sure.
Because anyone wants to run cost of goods lower, but maybe you're running them great. Maybe you're doing better than what you had thought.
Right.
So the key is knowing the numbers.
Yeah. No, and that's another reason why we wanted to get Jamie on here today was because he's got some really impactful information that's some of it's time sensitive. So we want to get this out, make sure the local independent restaurants can take advantage of some of this money that's available out there. There's quite a few topics here. I don't know where you wanted to start, but
we'll start with the second PPP. So I have talked to many restaurant owners. Most know that this program is available, but some didn't know, and so I didn't want to skip it when there's a possibility that there might be people out there who don't realize that they're eligible. The key for eligibility on the second PPP is that you were down 25% in any quarter. So it's not for the year. It's any quarter of 2020 compared to 19. So first quarter to first quarter, second to second, third to third, fourth to fourth. If you qualify in any one of those quarters, which here in Ohio, everyone got blasted in the second quarter because if you had a sit-down restaurant, you couldn't have indoor dining for April and almost all of May.
Even if you're rallied in Q3, Q2, like people were closed.
There's no chance unless you were already doing really heavy carryout like pizza.
Yeah.
You're down.
And I heard this time and time again. Your restaurant the whole staff could have got COVID. You're down for 2 to 3 weeks a month. Trying to get those people back, they're not real excited. It was a strange time. I mean, I think we all gloss over that and we forget it. It was really difficult for a lot of operators, and it still is.
Oh, absolutely. So this program, on the second PPP, they specifically targeted restaurants.
How nice of them.
Yeah, that's good.
While it's available to everyone, restaurants get an additional bonus where they get 3.5 months of their average annual payroll from 2019 compared to the first PPP, which was 2.5 months.
Okay.
And then they also allowed more expenses. So in the first run, you had to spend it on payroll, rent, and utilities. In this second one, you have a lot more expenses that you can use it for. You can use it for PPE, or your supplier like Hillcrest. It's just a lot more expenses, and you still have 24 weeks to use the funds. The best part about it is it's completely tax-free, and you get to deduct the expenses that you use it on. So not only are you getting this money and you don't pay tax on it, you still get to deduct the expenses.
Wow.
It's a huge win all the way around.
So break that down for me as a lawyer who knows nothing about finances. Sorry, Bowling Green, that finance degree is not paying off. But so if I have a $10,000 loan and I have $10,000 worth of expenses, the loan is forgiven, and then I get to deduct
on your tax return the expenses that you use.
Wow.
That's pretty nice.
It's an amazing program. I want to make sure that everyone
and it's deserved. Listen, restaurants got the most of the restrictions. They should have a program, dedicated to what they're doing. Yeah, that's awesome.
No question. That program could be a game changer for a lot of people, and we'll go over a couple of the other programs, but I wanted to put that out there. The second program I want to go over, it's actually a two-parter. It's called the Employee Retention Credit.
Okay.
2 different credits, one for 20 and one for 21. Credit for 20, you can still get it. So even though it existed in 2020, at the time, they weren't allowing people to take the retention credit and the PPP.
Okay.
And then they came by, and when they signed the new stimulus bill in December, they said, hold on, we're going to change that rule, and you can apply for both.
Okay.
You just can't use it for the same expenses, meaning that if you use the PPP for the period of May to August, you have to use the retention credit for wages not in that time frame.
Okay.
Okay.
The way the program works is it's very simple to do. You would actually do it through your payroll provider, or if you do the payroll, the person can do it as well. But you get a 50% credit on the first $10,000 in wages.
For the quarter.
This is actually for 2020, it's for the year.
Oh, okay.
So you only get to use it for the year for 2020.
Okay.
It is different in 2021.
Okay.
And you do have to have, for the 2020 credit, 100 employees or fewer, which for most independent restaurants, it's not a big deal because who has 100 employees?
Especially right now.
Correct. Yeah.
So it's most independent restaurants are going to fall under that category, but I wanted to throw that out there. They did change it to 500 for the second one, but
Now, what about multiple locations? Is that
each location, unless they're under the same EIN, the
Okay.
taxpayer identification number, would file separately.
got it?
Please, people, have your companies wrapped up in separate LLCs if you don't have that. But that's typically what people are going to have.
Correct. It's a great credit. To get it now, you would just amend your 941 form. That's your quarterly tax return that reports your wages and federal withholdings. And when you amend the return, you're simply putting on one line a number of wages that qualify, and then applicable 50% credit, and then they send you a check. Super easy, not a ton of work. It is not tax-free money, meaning that if, let's say, you get $100,000, you have to reduce your wages by $100,000 on the tax return. But still, it's found money or found
It's still
revenue.
cash flow, and it's coming in, and you're getting all of it except for the tax implications.
Correct. So it's still a great program. And carrying that forward, they made the credit in 2021 substantially better. So in 2021, they expanded the number of eligible entities by increasing the size to 500.
Okay.
They increased the credit from 50% to 70%, and they made it on the first $10,000 per quarter as opposed to
Really?
per year. Yes. So 2020, it was on the first 10,000 of wages for the whole year. 2021, it's per quarter.
Wow.
So think about that is how many GMs you have and how many kitchen managers and anyone. I'm just throwing a ballpark number out there. Anyone that's making 40 grand or above, looks
You're
really
getting
good.
7,000 a quarter.
That's pretty good.
That's pretty good.
Now, to be eligible, let me back up because the eligibility is the same, but I don't think I went over it for the 2020. There's two ways. For 2020, you can be down either 50% in a quarter. So again, comparing 2020 to 2019 quarters. Or, and this is the key that I've even speaking to accountants and they did not realize that this is possible. You can also be subject to what's considered a full or partial shutdown. So a full shutdown would be like in California, where they said absolutely no indoor dining, no outdoor dining, takeout only. Partial shutdown is what DeWine has done, where he said, okay, you can have indoor dining, but you got to have the social distancing, the 6 feet, the everything that goes into that, which reduces the number of seats that you can have and therefore impacts your sale. Every Ohio restaurant that had indoor dining is subject to these rules and therefore is also eligible, as long as the order is in effect, for the partial shutdown qualification. So you could be a restaurant and you don't have to be down to be eligible.
Just because you're in Ohio, you have
because you're in
restrictions, right?
Ohio and we have the restrictions actually on two levels. We have the curfew,
Okay.
and then we also have the partial shutdown. So as long as you're having indoor dining, you are affected and therefore are eligible for this employee retention credit.
Yeah, so all you states that are wide open, sorry.
So it is a great credit for 2021. Even though you can have the PPP and the employee retention, again, you have to use it in conjunction with each other. So if you got your PPP, the second PPP, in, say, April 1st of 2021, and you use it for expenses through June 30th, the employee retention would have to be for the period either before then or after then.
Okay.
You can't use it at the same time. And so it helps to actually do a little bit of planning and kind of figure out, okay, well, I'm going to have these sort of supplier costs that will be eligible, and rent and everything. And so I need this much payroll. So I'm only going to need, say, 10 weeks of the payroll. So for this period to this period, I'm going to use the PPP. And then before and after, I'm going to use employee retention.
Got it.
Okay.
And you can also have your payroll company do it actively, meaning if you're eligible in the second quarter, they can list the wages as eligible for the employee retention, and they'll actually be able to get you a little bit of the credit each week because it will reduce your federal and Social Security and Medicare withholdings. And then you'll still get the check for the difference at the end.
Wow.
Yeah, so I think this is, I mean, the amount of money that's out there right now, and this is not, I mean, we hope that this never happens again in our lifetime, but I mean, yeah, this is a once in a lifetime opportunity on some of this stuff, right?
It's the one thing that the government got right is that our small businesses and independent restaurants are the ones with the least access to capital. Applebee's, yeah, they may have been hurt by the pandemic, but they've got a giant line of credit or can go and get a line of credit, or, you know, Cheesecake Factory's publicly traded. If they suffer a little bit, they issue a little bit of stock, no problem. Yeah. The average guy who owns a single location, he can't do that. And even in the best of times, if he went to the bank, they don't even want to talk to him.
Right. No, they're like, we'll take your deposits if you pay us.
So in the middle of a pandemic, I mean, don't even bother calling.
No. Yeah. This is really a once in a lifetime opportunity, as you said, David, that you need to be exploring and doing. Really is the time to make sure that you have a good financial professional guiding you through this, because you're not expected to know how to do it. And just like the guy at Applebee's, he has 4 people that are doing this. I'm sure he's got one guy that's just a microwave technician, but then he's probably got 4 or 5.
He's got a couple of those, but
yeah. He's got 4 or 5 financial professionals that are doing this day in, day out. So,
and if you're listening to this and you're getting confused, or you're thinking of just turning it off, like, we're not talking about whether or not you should buy Bitcoin. We're talking about, like, this is money out there that is, not hard, but you've got to do a little planning, a little strategy. You got to have the right people around you, or we'll put Jamie's contact information in the show notes. You can get a hold of him, but let's go get this money.
And I'm going to let you know a little secret. You're going to pay taxes. Let's apply for this money. Let's get this money.
That goes into the last program.
There's more?
There's more.
Oh, wow.
I saved the best for last.
Okay, nice.
Well, hold on. It gets better?
It gets way better. So
don't turn off the radio.
Oh my God. So this has never been in a conversation I've had with an accountant before. Like, it's like, all right, now for the bad news.
So this last program had been kind of rattled around in the House of Reps all over the summer, and then were they going to do it? Were they not going to do it? But the basis of it was to help independent restaurants get through the struggle. And the way it works is, as long as you have 20 or fewer locations and you had lower revenues in 20 compared to 19, you're actually eligible for this program. The math behind it, they tried to make it as easy as possible, which is great, because the first time they did the PPP, it was ultra confusing. And then they realized, hey, you know what? Sometimes the simplest way to do things is best. It's a pretty simple calculation. You just take your 19 revenue minus your 20 revenue, and you subtract any PPP loans, and whatever that number comes to, you get. If you had, say, a sports bar doing $2 million a year in revenue, in 19. In 2020, let's say they did $1 million in revenue. Okay, the difference between those two numbers is $1 million.
Okay.
And then let's assume that they got both PPPs, and that the total on that was, say, $300,000. Okay, so we take the $1 million minus the $300,000. That's $700,000.
Okay. Tell me more.
And not only, and again, you get it. You have till March of 2023 to use it for eligible expenses, which came out to just about anything short of buying yourself a Lamborghini.
Do not buy a Lamborghini with this money. That's bad for the industry.
So you can use it on payroll, rent, utilities, your supplier, PPE, cleaning, building an outdoor patio to expand it.
Buying the building?
No. So you cannot you cannot buy the building. You cannot use it for a remodel on the inside.
Okay.
Remodeling only of the patio. They wanted to encourage, if people had costs or we're incurring costs related to outdoor dining. So if people are now looking at it like, hey, people are still afraid to eat indoors,
Yeah, spruce up the patio.
Yeah.
build a patio,
Yeah, I love
get the revenue.
Okay.
This is a giant program.
Wow. I'm in disbelief. Like, so what's this one called?
This is called the Restaurant Revitalization Fund.
Okay, so this is the one that just came out today.
Correct. So you can apply starting at noon today. They opened up the applications.
Monday, May 3rd.
May 3rd.
The only caveat to that is anybody can apply right now, but they're only going to be processing applications for people who are either a veteran, woman, or minority.
Okay.
And minorities included essentially everyone. So Latin, African American, Asian, Pacific Islander, Native American. You have to be 51% or more, either one of those ethnicities or woman-owned or a veteran, and you get pushed to the front of the line for the next 3 weeks.
Nice.
But you can I would still encourage everyone to apply now.
Yeah, so you're in line.
Yeah, just know that it's going to be a little bit longer before it's processed.
Yeah.
That's the only thing.
Okay.
It is also similar to the PPP, non-taxable, and you get to deduct the expenses. So a huge win.
And this, correct me if I'm wrong, is this a loan or a grant?
This it's considered a loan until you file for the forgiveness. You know, get the used up the expenses. So let's say you got the money and then the next day you close your restaurant.
Yeah.
Okay, then you got to pay it back.
You got to pay it back.
Right.
Yeah.
But a loan that is forgiven sounds like a good thing.
It is.
Okay, that
It's
sounds
very
okay. People, you need to be doing this.
Yeah.
There's not an option. Should I do it or should I not do it? You need to be exploring this, researching this, and getting this done. It is new and it's paperwork. And if you're not a folder person, I get it. But you need to do this. This is a once-in-a-lifetime opportunity to make your restaurant stronger, because I guarantee you the national chains are out there doing this stuff. Now, they may not be able to take advantage of some of these programs, but they've
already got advantages.
Yeah,
just go get the money. Money's
go
there.
get the money.
Yeah.
And
sorry, didn't mean to cut you off.
No,
just
but
like,
like
just
you
get
said,
the money.
you
Just
summed
get
it
the
up. Get the money. Take the money. It's take the money. Right?
Yeah.
There's also a nice piece to it where, let's say you opened in November of 2019.
Okay.
You get to take your average monthly revenue. So it's not like, hey, I only did 200,000 in 2019 and I did 600,000 in 2020. I'm not eligible. No, you get to take the annualized. So if you did 200,000 for November, December, that's 100,000 a month. That's 1.2 million. And you get the difference between that 1.2 million and what you actually did. So they're even helping restaurants that weren't open the full year 19, and they even are now helping restaurants who opened in 2020. So the calculation for that is they take all your eligible expenses, which are the same that you can use it on. So essentially anything that you would have spent money on minus the build out of the interior of the restaurant, minus the 2020 revenue, and then the difference between those two, you get the money.
Wow.
So we have some customers that opened at the end of 2020.
Yeah.
And with training and soft openings and everything, they spent more on expenses in 2020 than they did in revenue. And they're going to get some money from it.
Wow, that's amazing.
That's fantastic. I don't usually have much good to say about the government, but it seems like this was well thought out. Restaurateurs gave their input, and financial professionals that service the restaurant industry like yourself, Jamie, were really giving their feedback on how to structure this, because this seems very logical and very restaurant friendly. I know it's the Restaurant Relief Act and that's designed to help restaurants, but a lot of things are designed to help certain industries, and they don't end up doing that. So I'm impressed.
Or there's a bunch of underlying things that, counter.
Yeah. It's like here's a this is the billions of dollars, but no one's going to qualify for it.
Yeah. So you got to make it simple enough that the average individual can understand it and do it, because for the most part, these independent restaurants don't have a team of people that they can count on to get this done.
No.
So two questions I have is, have they printed enough money? The second question is this going to be my kids or my grandkids that are going to really be screwed?
Probably us as well, but all three.
Yeah.
So it's a lot of money, but under the adage of if it's out there, might as well take advantage of it.
Yeah, right. Yeah.
No. You have to go out there.
Yeah, no,
and
this
get
is all
money.
legitimate. Yeah, this is all legitimate help, support. And listen, you've gone through this year. You've been restricted. You've gone through challenges. I mean, everything's up against you right now. We've talked about it. Supply chain, labor, all the things we talk about on the podcast. Go and get this money. It's there. Go get it.
Go get it.
Yeah.
Love it.
Jamie, thanks for coming on, man. This was awesome.
Thanks for having me, guys.
We're going to put a lot of the supporting information in the show notes. Also with Jamie's contact. If you guys got any questions, reach out to any of us, and we'll see you next time.
No, thank you, everyone.
Thank you.
This is a high quality pod. Thank you, everybody.
Take care. Adios.
Thank you for listening to Restaurantopia. The gratitude that we have for each and every one of you spending your precious time to listen to this podcast is immeasurable. Please make sure to tell a friend about this podcast. And also, if you have any feedback for us, visit us on restaurantopia.com and drop us a line. You can also subscribe on your favorite place to listen to podcasts. Thank you and have a great day.
We also want to thank our sponsor, Hillcrest Food Service. If you are a local independent restaurant and are looking for a distributor who has chef and operational consulting, provides marketing support, does menu reviews, and most importantly, wants you to be successful, reach out to Hillcrest Food Service at hillcrestfoods.com.